Hello everyone, welcome to the channel. This channel is all about analyzing companies and looking for investment opportunities. I hope you will find my videos helpful. Today we are going to look at the company Samsara, an IoT SaaS company. This is a company that business-wise is doing pretty well, looking at the financials, but their stock price is going down this year, quite contrary to many of the fast-growing companies. So is this an opportunity to buy an undervalued business? Well, let's find out. First, what do they do? In simple terms, they bring IoT and cloud-based software to the physical operation industry, the world of trucks, factories, construction sites, and field operations. By using sensors, cameras, analytics, etc., and AI of course, they manage to digitize operations, connect them into a single connected platform. They call it Connected Operations. Now, according to their 10K, they really have two core applications. The first is video-based safety, basically using live cameras and AI to analyze, is a driver driving safely, or record the video for later exoneration in case things go wrong, or coaching the future driver behaviors. The second is called vehicle telematics, with real-time GPS tracking, vehicle utilization, and fuel consumption, etc. They can improve the fleet management. Looking at their presentation and website, they have already expanded a few more applications, like equipment tracking and site security. Although they didn't disclose how much each application contributes to the top line, we can see their entire revenue is increasing quite fast. So for their last 5 quarters, their revenue is increasing at about 30% rate. Their annual recurring revenue, ARR, is also growing at around 30% rate. And their large customers, basic customers spending more than 100K ARR, the number is also growing rapidly. And in their presentation, they also show that they are adding new products and their customers are expanding into using multiple of their applications. All of this sounds fantastic. So what about the industry? Is there enough room for them to keep growing? Well, according to them, the total penetration is still very small at the moment, so there is enough runway left. And it gets better. They are a founder-led company. Well, you might say, so what? There are plenty small companies like that. But in this case, the current CEO Sanjeev Biswas and CTO John Biggett co-founded another company called Meraki, which they later sold to Cisco for $1.2 billion. And Meraki is, or I should say was, also a cloud-based company related to security cameras, etc. So basically, they did this kind of business before, successfully, and now they're doing it again. And this kind of leadership experience makes me very optimistic about the company's future. Now let's look at their financial statements. The revenue is growing fast, and their net income, negative at this moment, is also getting better, almost become positive. Their debt level is very healthy, I would say, and their free cash flow has already become positive, which is a very good sign, because it usually means the business can now sustain itself. So far, we have looked at the bull case. What is the bear case for Samsara? I think they definitely have some serious competitors. The Verizon Connect, the big department from Verizon, larger size, larger brand, larger distribution network, but kind of lacking in the user experience and innovation. The GeoTap, a platform more open and customizable compared to the seamless integration of Samsara. The LYTX, I don't know how to pronounce it, a company specialized in video safety who is collaborating with GeoTap. And Motive, a similar integrated platform strategy, but more focused at trucks and the delivery industry. Compared to all these companies, does Samsara have any advantage? I think yes. It clearly provides a more seamless integrated platform, which provides convenience and better user experience for their customers. Speaking of their advantage, I think they have at least 3 modes. One is high switching cost. Once all of their IoT devices are deployed and their platform is embedded into the customer's workflow, it's going to be very hard to switch. 2 is network effect. Obviously, with more customers, more devices are deployed, they would have more data points, which would enable them to have better analytics. And last but very important one is vertical integration. They design their own IoT devices, so they can achieve better control, better margin, and better quality. After seeing all of this, I really like Samsara as a business. Now let's look at their valuation. Is the current stock price a good investment? This is where it gets a bit tricky. So I use their last positive free cash flow as a start, assuming 5 years, 10 years, or 20 years of fast growth. Say we also have 3 different growth rates, 15%, 20%, 25%, with the business grows at 2% after the high-speed growth. Then I discount it back with the risk-free rate 4.7 plus some risk premium, let's say 2%. Just FYI, purposely I choose not to use a beta in the discount rate. So with all these assumptions, my valuation would arrive at 10 billion with 20% growth rate of 10 years, which is definitely lower than the current market cap, which is around 21 billion. Of course, we can go more optimistic using 30% rate or a longer growth period, but I'll try to stay more conservative. My point is, the company today is still very expensive, especially if we demand a safe margin. But the business does look very attractive. So, is today's video helpful to you? If you find this video useful, please give a thumbs up and hit the subscribe button. I plan to build this channel by providing this kind of analysis, digging into the company's annual report and business model, trying to give you some insight and eventually a prepared mind. Like the legend Charlie Munger often says, opportunity comes to the prepared mind.